think Bitcoin will get to 250,000 in 2026 because the institutional demand is still there. We just got to find a way to get Bitcoin value into the altcoin space. And it's likely going to be some sort of a non-custodial credit play. So the bridge infrastructure is almost there because at Taproot, we have a path to get Bitcoin to touch other things. We call that Bitcoin DeFi. Swee's betting heavy on it. We're betting heavy on it for Cardano. We have a lot of people working on it, but it's not good enough. You also need a credit protocol and yield protocols. So on the credit side, you need a non-custodial way to lend your Bitcoin for stablecoin, and then you deploy your stablecoin, get a yield in DeFi. And ideally, the whole circuit should be greater than the cost. So you get a passive yield with relatively predictable returns, even though you're paying a credit fee for getting those stable coins. So those non-custodial lending protocols, they're under construction right now. There's a lot of people working on it. They can't do custodial because a lot of Bitcoin's held by institutions. They can't lose custody of the underlying asset. And a lot of Bitcoiners don't feel comfortable handing their Bitcoin to other people. So if we can find a path for Bitcoin to work its way in a non-custodial way into the DeFi space and generate yield, then those trillions of dollars of value is going to leak into altcoins and pump them up. So that might be the mechanism that we actually get some real world adoption and in some better markets in the altcoin space as a result of the Bitcoin appreciation. But to be frank, we're going to have to decouple the two at some point. And I think this is the closest in the history of the industry where a decoupling is possible, where it's no longer the case that when Bitcoin goes up, crypto goes up, and when Bitcoin goes down, crypto goes down. They can operate independently of each other. And it just completely depends on where the user acquisition is going to come from. So are we getting users from new sources like privacy and off-chain is coming in? We have several products we're launching, one of which next year is built for bear markets, and it's all the revenues off-chain that comes on-chain. So we're really excited about that. And we have some other products that are fast follows behind it that we think fit those market dynamics. But it's going to be an interesting question to see. But I believe Bitcoin will reach an all-time high. And I also believe there's going to be some value leakage from Bitcoin in the altcoin space. Is it going to be proportionate like 2021, where it's $68,000 Bitcoin translated to $3 ADA, translated to all-time high for Ethereum? Hard to say. It's too early in the cycle, and the macro is still too uncertain about a lot of things. Like we don't know if clarity is going to pass, or if we're going to lose our window. We have to wait till after the next president comes in 2029 because the Democrats are going to do shit. And we also don't know if we're in an AI bubble or not. The biggest problem we have right now is NVIDIA is worth more than Australia and Canada combined. And when you look at something like that, you're like, that's kind of like the Emperor's Palace in the 1980s being worth more than California. It really feels bubbly. And if that bubble pops, it's about 1% of the entire US GDP. So that can create a catastrophic recession. And unfortunately, there's a correlation between tech stocks and crypto. So that could drag all of crypto down if that bubble pops. You have a situation where supply is relatively constrained, and you have institutional purchasing, so you naturally have a push up, from that. And it just by Fortune 500 and others taking nation states taking Bitcoin positions, and they say, hey, just throw a little bit of money. The other thing is that Morgan Stanley just announced to its private wealth advisors, there's 17,000 of them, that they can start advising people to take crypto positions. And so you have all these structured financial products that are coming out that are built in a way to enable retail investors to come in through traditional investment mediums. So they're not going to say, go buy Foo Coin or Bob Coin or Jim Coin. They're going to say, buy Bitcoin as a starting point. It's a safe entry point in the market, and the financial advisor feels like they're doing a good job there. So when Morgan Stanley says they can advise between 1 to 5% for 17,000 private wealth advisors, the other guys are going to do the same thing. So you have a lot more buy demand coming from the 401k side, from the institutional side, and from the governmental side as treasury management relative to fixed supply. So you have to push up the price. And if you do some models with it, 250 feels pretty good within 12 months of that demand factor. You're going to have ebbs and flows, like the infinite money glitch of DATS has been kind of closed. And so MicroStrategy is going to be having some issues. And so that could create a localized collapse. I had it described to me by a financial analyst once of throwing a large rock in the pond. Obviously, it doesn't kill the pond, but the ripples get to the shore, and there's a little bit of turbulence. And so if MicroStrategy collapses or has an issue, well, that's going to cascade and create a local disruption in the market. But if they can hold on and keep going, then there's nothing to stop a gradual appreciation from the inflow there. And then the hope is with Bitcoin DeFi, we can leverage a way to move that into the altcoin space and create some TVL from it. But that's just a Bitcoin oriented world. But bifurcation, there's other user adoption use cases that are come independent of it because of stable coins. That's the other thing we haven't priced into the markets. With the Genius Act, now everybody feels comfortable doing stable coins. That vertical is going to grow over the next 5 years from 250 billion to about $1 trillion. That's the estimate that everybody's saying. Well, it's hard to have $1 trillion in stable coins and not have that start playing in degen land, and it's because it's native rail. So even if only 10% does, $100 billion does wonders for your TVL and for, all these small cap cryptocurrencies, and it flows really quickly. And it's getting easier and easier to share liquidity and move liquidity out, like you see with Midnight. We have this $1.5 billion trading. They're seamless between the DEXs and the SEXs, and everything is just moving really swimmingly for that. And it's just natural to see that. That was unprecedented when we launched Cardano back in 2017 to have volume like this. You just never see it. You never see these types of arbitrage strategies exist, but it's just pretty straightforward. And you can even see with the perps and how people are layering things with the glacier drop. That's a very different trading pattern that would be much more reminiscent of a traditional Wall Street pattern than it was in the historic Web3 days. So I feel really good, about those prospects, and whole economies are retuning to stablecoins. Like Argentina, there's $100 billion in stablecoins now relative to a $700 billion economy. So one out of every $7 in that economy is in stablecoins. And that's going to grow to about 300 billion to 500 billion over the next 10 years. So they basically dollarized the economy. They've gotten off the peso and they're moving into stable coins, and they're doing all the remittances and credits and business transactions and things like that with this. Well, that's going to end up in the crypto space. So that's independent of Bitcoin. It used to be Bitcoin was the gateway drug and we'd come in through that. Now stable coins are the gateway drug and they're coming in through stable coins to the crypto space. And hopefully that's large enough of a wave to push the markets back to all-time high.